Hello viewers, welcome back. So this is the 12th video as part of our series of video of the playlist of Power of Data Analysis. So in the previous videos, we saw the exceptional report related to chart of account of financial accounting masters and chart of account of inventory masters. So starting this video, we will see more exceptional reports that you can quickly generate and view, and whatever wherever the corrections are required, you can quickly take the relevant action. Now in this video, we will see very important, very useful and time saving report, which is verification of balance. So I'll cover in two parts, 12A and 12B, so that I can explain various techniques that you can apply to verify the opening balance. Let us go to Tally and explore this wonderful feature of verification of balance. We had covered the exceptional report related to these two masters, verification of chart of account and verification of stock items. Now, a very handy exceptional report, which is verification of balance, is what we will cover in this video. What type of exceptional balances are we going to see in this report? So let us understand with a use case. This report helps businesses and the auditors to verify whether the finalized closing balance of previous year has been correctly carried forward or captured in the current year. Let me give an example of a practical use case scenario. To file income tax return pertaining to previous year, in our case the previous year is 2022-23. The audit for the year 22-23 is done in the current year, which is the assessment year. After the audit is completed, the filing is done for the previous year in the month of September for the financial year 2022-23. Generally, when the client or business provide their tally data for audit, they would have accounted transactions pertaining to the current year also. In some cases, the company will split the data between previous year and current year. When the data is split in tally, tally will automatically carry forward all the closing balances of non-revenue account, which are balance sheet, ledgers, closing balance as opening balance for the current year. In our example, what we have been seeing, we have two companies, one company or a separate database for previous year, and the current year company is in a different tally company or database. The previous year data is provided to the auditors for audit. During the audit, the auditor would have made audit observations pertaining to the business's books of account, and in concurrence with the client, they would have made changes to the previous year books of accounts as part of audit process. Once the previous year books have been audited, the auditor will send a copy of the finalized tally data of the previous year to the client, and generally they will retain a copy of the finalized data for their future reference. The changes being made in the previous year as part of audit would have impacted the balance of the non-revenue ledgers, which is balance sheet ledgers, for the current year, since we have already split the data for the current year with the previous balance. Since the audit has been completed, there could be some changes in the closing balance as part of audit finalization records. Since the client has already split the data for the current year with unaudited non-revenue balances being carried forward to the current year, which I just mentioned. Ideally, the accounts team would have cross-verified the closing balance of the finalized data with the opening balance of the current year data and modify the closing balance accordingly. This is the normal expectation. Now this report will show differences in the previous year closing balance and the current year opening balance if there are any differences. That is the primary objective of this particular report. Wherever there is a mismatch in the balance, the report will reflect. This way, the client can make sure that the finalized closing balance of the previous year has been incorporated in the current year before they present their current year data for audit, which is 2023-24. From the auditor's use case scenario, when the auditor takes up the current year data of the client for audit, they will first compare the opening balance of the current year with their finalized closing balance of the previous year and make sure the opening balance of current year is matching. This is where this report of verification of balances provides the information, and the same can be verified quickly as Tally will highlight the differences. Important note, this report of verification of balance will not be shown where the previous year and the current year data is in the same company or the same database. Tally has the natural capability to keep updating the current year opening balance as and when any changes has been made in the previous year data while auditing entries have been updated. Hence, this report is redundant in case of single Tally data for both years. This you have to remember. Let us now drill down to view if there are any difference in the balance. Notice there are 4 sections in this report. In the particulars column, we will see the list of masters. The second column will display the opening balance for the current year. The third one is the closing balance, which is the finalized closing balance of previous year, which is 22-23. The balances are displayed here. Now the last column will give you if there is any difference in the closing balance of previous year and the opening balance. Now that is what we see here, that in the difference column there are certain values captured here. By default, the listing will always be at the group level. The advantage with this report is you need not have to verify all ledger balances. Wherever both the balances are matching, the report will be shown in the black font. So notice here, capital account, the closing balance is 33,50,000 and the opening balance is also 33,50,000. There is no difference. The area of concern or the area where you have to concentrate on the difference is wherever you see the values in the red font. If you take current liabilities total closing balance in the previous year is 4,85,871, but whereas the total of current liabilities, which means the ledgers under the group of current liabilities, or there could be subgroup also under current liabilities. Normally under current liabilities, we will have duties and taxes group, sundry creditors group, and other groups. So the difference here is 2,409. Now if you want to view only the exceptions, you can filter to view only exceptions. So how do we do that? Click on the blue arrow here under F10 balance variance. When you click here, you have this option here which is exceptions only. The keyboard shortcut is F10. Since it has got double underline, you can hold Ctrl F10 to activate this option. When I click on show exceptions only, you will now notice that Tally is filtered out all the balances of previous year and current year which are matching, and only it is displaying the exceptions related to various groups here. From the long list of trial balance, we have now narrowed down to 4 groups where there are exceptions. We shall continue further in the next video and explore various techniques to be used to analyze the reason for difference in the balance and also rectify them on the fly. I hope this report of verification of balance is going to be very helpful for all of you to quickly check the closing balance of previous year with the opening balance of the current year in case of split database, which I had explained earlier. We just saw how the exceptions are getting reported with red font, and in the upcoming video we will see various techniques that we can apply, and also we will learn how quickly we can correct this mismatch in the closing of previous year balance and the opening balance. So thank you all once again for staying till the end. See you all in the next session. Thank you very much.